12 p.m. Eastern time on the 7th. We're doing a little midweek market minute. Let's dive in and see what we've got going on for the week thus far. Had some profits that we protected today in equities on demand. We're trading at 497.50, back up towards these highs. Here is the dynamic trends. Yeah, we're trading right back up there where we were this morning. So let's drag over my broker platform. And this was the trade that I had running earlier. Let's see here. So I'll talk through this in just a little bit. I'm going after. If you guys hear the clown noise in the background, that's Benji playing with some toys. Okay, so where is the SPY at right here? This was filled 421. So we paid 316, close it out at 421. If I resubmit the trade, I'm just curious what it's trading for right now, 425, 426. So I've sacrificed. I think at one point we're talking in session, it was up to like 445 or 450. Which would have been about a 41% take profit on that iron condor. This is a reverse iron condor. But anyway, took profit on the SPY. We closed out yesterday on a couple of trades for ABBV, hit some new highs. And so we closed that one out for profit. I'll just show you the spreadsheet from Equities on Demand. ABBV closed out. So paid 481, closed out for 6, a nice little $1.19. This was last week, closed it out for a small win on CVX. I'm curious where that one is, by the way. I didn't get a chart alarm going off on CVX. We are at 152, which means we'd be sitting right around that $4 mark. We paid 522, and I think we closed it out for like 570 something. So we did the right thing by closing that one out. That's good. Apple, we've got some credit spreads running that are in the money, so we're trying to have a small risk where if we get one to win and one to lose, we'll still walk away with like 80 to 85 cents. Amazon was a nice win. Meta was a nice win. Microsoft is looking worst case scenario unless we get a big surge today or tomorrow. We need to see price get above 420 or at least close to it. I mean, what I'd like to see on Microsoft is not taking the full 772 loss. If there's a way it gets up into the 420s again, then possibly reduce the debit to, I have a 772 debit, and that's my worst case scenario for the loss. But maybe we can take like a $4 to $5 credit. So, or like a $2 to $3 credit, maybe only lose like half this trade. So we'll see if it expands. I looked at a roll this morning, just didn't look good. So I put on a little, I sold some options around Microsoft above and below to try to collect and mitigate some of this risk. So maybe at the end of the day, like my 772 turns into like a $3 or $4 loss, which again in trading is part of the game too. Is if I can mitigate some of that loss with high probabilities and just keep trading through things. I mean, yeah, I'd be happy to reduce my cost, reduce my loss by $2 or $3, while the other ones just roll in for some nice consistent profits. We're giving ourselves a little bit of time here. I've got a NASDAQ and DIA trade that need to have some pushing by the end of the week. This is the SPY trade that I just talked about that I closed out for a small win. Actually, was that the one? No, this is the one. This is the one I just talked about and showed. Closed out for 421, is trading right around the same price right now. We have until the 16th on the Qs, the IWM, and AMD. See if we get some movement there. And Apple's, like I said, till the 16th. So let's just have a look at the markets. I'm in the chat. Chris is here. Not just me, this other Chris Baker, Chris B. What's happening, hey, everybody? Happy Wednesday. And welcome back. I'm just typing this in the chat right now. Welcome back to the midweek market minute. Charts, symbols, Q&A, all welcome. Okie dokie. So that's going on there. Take a look at the Tasty platform. Just hanging out, trying to find some trades, got some positions running, looking to see. So Alibaba and Baidu, some credit spreads. Those are down a little bit with a dip. So Alibaba had earnings. It had a slight miss. I mean, maybe I'm too early, right? The reality is maybe I'm too early on Alibaba. We were up to around $78 on some animal spirits encouragement from China. Earnings was not terrible. It just, miss on EPS, but revenue was pretty much right as expected. It just didn't blow out earnings, which I will say this, it was a little, maybe I got in the habit of like, oh, wow, 1, 2, 3, 4, 5, 6, 7, 8 earnings in a row have been positive, and 8 earnings in a row, and the stock has been not going higher, right? So I thought, well, if we just have a decent earnings print and this has been lifted off the lows, that maybe we just have a surge and break to the upside with these, these supply zones to the upside. So anyway, we did credit spreads. If I'm too early, hopefully we can ride this out, not get assigned on it. That is the plan where, maybe we can just take a small loss. It's a 50-cent loss or so, but I told traders this for the last like 6 to 12 months. I mean, if we come back down and tap this double bottom at $63 or $60, I'm going to do the same thing again. I'm going to stagger out a bunch of credit spreads, get a bunch of options ready. And I still like Alibaba with a little bit of tests. I'm testing for hopefully some big upside potential. Other upside potential I want to talk about, Russell. I talked about this morning during the trading room. What's up, Greg? How are you, man? Nice to see you. And let me type in Discord right now that we are live. I'm pretty sure everyone knows that we're live. So live now, FYI, live now for the midweek update. And one second here. Okay, we're good. All right, Shoaib's in. Awesome. Okay, so IWM. This is what I was kind of excited about. And again, this may the timing might be off, but I would say that what I'm looking for would be this. We have had small caps underperforming in a big way until last year's November December rally, right? This was up nearly 30% while the other markets were up about 15 to 16%. I think they've stretched from the October lows to current prices. We're up about 20% in the S&P. We're still hanging out around 24-25% profit on the IWM, which is the small cap Russell 2000. Now, what I talked about this morning was you compare the IWX, which is the top 200 of the Russell, and it looks like, wow, that's killing it. That's even better than the IWM. Well, from the percentage point, it's way lower, but from the fact that it's up at all-time highs, that's impressive. So I mean, the concentration of the top 200, this is similar to what's happened in the S&P. You have about 10% of the S&P. In fact, not even that. You have about maybe, I guess, so you got 10 stocks, right? 10 out of 500. What is that percentage? That's freaking low. 10 out of 500. 2%. You have 2% of the S&P that's leading the way with all the Mag 7, the Super 6, the enormous 8, the whatever you want to call them. Large cap is leading the way and allowing these markets to melt up higher while the broader market is not performing well. Now, that doesn't mean that it's going to stay that way where we're either one going to see higher concentration and more melt ups from the big companies that just keep everything afloat because so much money is getting pumped into them every month with forced buying and pensions and 401ks, or if we are not going to see a recession, if the Fed, yes, we're going to keep rates higher for longer through March and maybe see a rate cut in May, but it gives the small caps a chance to catch up. That's my point. It gives the small caps a chance to catch up. Now, the top 200, right? The top 10% of the Russell 2000 is up to all-time highs, but like I said, that October bottom right here, that October bottom is up around 15% from those lows, okay? That is not the same as the crazy rip that we saw in the broader market with 2,000 companies in the Russell 2000 and truly a small cap gauge. Here is the low, and the high was up 26.5%. We're still up, like I said, around 19.5 to 20%. So we're hanging in there, but to me, it's pretty easy. Technically, this is what I'm looking for. If we break above 200, we break above. We're trading at 192 right now. We break above 200. We break above 205. I am going to be bullish and pretty aggressively bullish to this level. That is my first target. Okay. Now there's another level on top of that. This is what I want to look for. If we have this larger swing, and this is where I can't put a time on this, I can't say that by X day or X day or X month, this is going to be where the Russell's at. But I can say that I'm pretty confident that if and when we get confirmation, we're probably going there. And if it's anything like the volume and the volatility that we saw to get off of those October lows and rally 26%, I wouldn't be surprised if that 20 to 25% to the upside is also fast. Like within maybe, once it confirms, like maybe within a month or two, it's at those all-time highs. And what's kind of even more exciting is if we give this enough time, maybe if we truly have a broad market rally, this is a swing to get small caps to catch up and go to all-time highs, right? And I mean, would they blow off this top right here and get up, another 20 some percent higher? Maybe, right? But where would we be on the broader market? Right now, we're trading at 497 on the SPY. I think this 500 target this week is very possible. If we hit the all-time highs again and we get to 500 plus or 5,000 plus, I mean, we're at 49.89. 49.89 in the SPX. If that hits 5,000, is that a massive milestone to take profit, or is there enough to melt up and get through there? If we had all-time highs in the SPX, do we get the Dow, creeping up towards 39,000 or 40,000? Do we get the Qs to make some new highs as well in the Nasdaq? Yes, no, maybe, right? So I still am very curious to see, like, does this market just continue to melt up until rates start to get cut and other things happen? I don't know. I don't know, right? But I will continue to trade. I'll continue to grind. I will say this though, the volatility has not been extremely exciting. Yes, we've had some one-off moves. Netflix had a big move, and Meta had a big move, and Google had a big move, and Tesla had a big move. But we've also had a lot of earnings that haven't been that great. And great as in, like, earnings are plus or minus, and it's kind of a crapshoot. Sometimes you win, sometimes you lose. But as far as volatility goes, the ones that I mentioned had big moves and exceeded what was expected. But we've had a lot of them stay right in between the highs and lows that were established. So here's an example. Here's Apple. And I'll get to Forex here in a second. So if you have any questions, let me know. I see the chats, filling up here a little bit, so that's great. But again, Q&A is welcome. Chart symbols, let me know. But here's Apple. Apple is stuck right in the middle, right in the middle. And I need Apple to get above 192.50 or get below 180. At this point, we're at 189. I might as well cheer Apple onto the upside and give me a couple dollars, and that's an 85 to 90 cent net profit, because we took two credit spreads here. Both of them are in the money, and we're only risking about, I guess, 30 to 40 cents. What is it? We took like a dollar. If I don't, I'm just, my math is off right now. Long story short is we can win one, lose one, and walk away with like 80 to 85 cents. That's how I calculated the trade. I'll explain it better in class. But if we get above 192.50, we're going to make money. We get below 180, we're going to make money. If it stays in between, that's my risk, but my risk is very manageable. All right, look at Microsoft. Microsoft, we're trading at 411. It's right in between. I need Microsoft, the way that I took this trade, I need Microsoft to get above 420. All right. And again, we have, today's Wednesday. So Wednesday, Thursday, Friday. If the market's able to push, $6 or $7 a day and have some directional push, and Microsoft taps all-time highs again, maybe this is enough to, I probably won't make money on Microsoft, but I could at least reduce the risk on Microsoft. Right. Let's see here. AMD, we took profit on, or we had this one in between. This one's in between. Same thing. So in between, I need price to get above, 185, or I need to get to below 165. It hasn't happened yet. So there have been some big earnings plays. I mean, AMD is one of the hottest sectors: semiconductors, chips, technology, AI, right? All this stuff that's like just, I mean, Nvidia is one of the best performing stocks ever. You go back 20 years, the last 15 years, it's been Nvidia, literally best performing stock for the last 15 years. Which is funny to be like, it wasn't even on people's radar until like literally last year, and it's already up 200 and some percent. So I don't know. I mean, good luck if you're just buying Nvidia and thinking that's the best stock ever. And I know you're getting some love on it right now, but eventually, Nvidia is gonna it's gonna it's gonna recalibrate. It's gonna get fixed. This ridiculous, I mean, I would say stupid rally, to be honest, is going to get corrected and checked at some point. This is up 500% since October 2022. It'll correct. Am I going to call the top in Nvidia? Absolutely not. Do I care? If we go from 700 to 1,000? Not really. I really don't care. Do I care if it drops from 700 back to 480? I really don't care. Right? I mean, to me, this is overvalued. It's overbought. It's super volatile, and it's expensive. So, I mean, there's better ways for me to allocate profit than trying to chase something that everyone and their mother, brother, dog, sisters trying to chase. So I'm good just watching it as a spectator, but this is enough where market cap wise now we're at $1.7 trillion. I think I had a screenshot of this. I mean, we're certainly talking probably top five stock in the world for market cap, maybe. Let me go. Let's go Google top 10 market cap in S&P. Here we go. Well, I just wanted to go back to that Google thing. There we go. That's sector weighting by market cap. Okay. So Apple, Microsoft. Okay. So Nvidia is number 4. I said top 5. And they must have just eclipsed Google. Actually, I take that back. No, well, as far as GOOGL, yes, they just took them out. But if you go Google here and here, Google is still larger than Nvidia as far as the combo. But this is just ridiculously impressive, And so we're talking about these stocks as a whole just crushing it. And then you get a company like this, Eli Lilly, making a crazy run to the upside because of what? Ozempic, right? We looked at the stock. We actually looked at trading the stock this week. Eli Lilly is trading at 725, and this was a hypothetical earnings play because it was stupid expensive, so we didn't take the trade. This would have been, these are the two options we would have considered. It would have been, if we did the 710 by 760 and the 695 by 655, we're getting ourselves, $50 on the upside, $40 on the downside. You pay $28. Right now, you're trading up about $15 in profit ish, maybe 15, maybe 17 with a little bit of time, and maybe some premiums. But again, you're down about 50% on that trade. So that trade sucks. If you wanted to make it cheaper, you go to the 750 by 770, you pay 835, you get, a net 1165 if price just blows through these highs or lows. It didn't do that either. I mean, we're not even close to 750. We're not even close to 675. So I am happy that we didn't take that trade. But this is kind of the stuff that everyone's just jumping around, and it's like you're chasing momentum right now. That's what it feels like. All these traders, all these funds are chasing momentum, and it just feels like you are doing that. Like you are just you're fueling the frenzy, and you're chasing the tails of these markets, trying to get this momentum. But the reality is, we're barely climbing higher. Yes, we've had this crazy run, and all the momentum was really established in November, December. We had a bit of a pause in December. We came out this year swinging with a little bit more melt up, but the path and the progress and the speed that we're seeing right now is very slow. And I still think that this rally gets checked a little bit. We're at all-time highs, which means, look, we could still have pullbacks and find 480. We could have 3 to 5% corrections and pullbacks. Look, overall, I'm still bullish. I think right now everything looks good for the most part. U.S. economically, geopolitical tensions have been somewhat contained. Obviously, things can get way worse, and things can change in a fraction of a second. We can have quick sector rotations, but at some point, I'm very curious if all of the top 10 market cap concentration starts to get reallocated to the larger market, reallocated to value, reallocated to sectors. I mean, healthcare financials this year are certainly not discretionary. They're not technology. They're not communication services. Those are all the sectors that are crazy performing, right? If you go into sector performance. So year to date, S&P's up around 4%. Let's go year to date. Okay, 3.87% on the S&P. Communication services mainly led by Netflix and their crazy earnings. Technology with I think communication services might be Meta, might be Netflix, maybe it's either way. Communication services. Let's see what the big jump is here. Meta, huge jump to the upside, and Netflix. Well, both of them. That's why it's up so freaking much. Okay, Disney comes out today after market, but alone, just all by itself, Meta and Netflix with the big moves they've had. They're just absolutely smoking this market, and with the weighting, the index weight that they have, they're helping drive this thing higher. So, but what I wanted to say was, look, this is an impressive little recovery for healthcare. We talked about this week in the trading rooms. Okay, who the hell is this? What is this crap? Rachel, get off my channel. What is this nonsense? Can I delete this message? Block user, add to block list, reply. Like, don't spam. Don't spam my chat, please. That's annoying. Okay, healthcare. 5.57%. Healthcare is actually beating the broader market. So we looked at this week. I'm still not done kind of assessing what I want to get into, but if I took like the top index weight for healthcare, I wanted to look at Pfizer all the way up to Eli Lilly. Now, I'd say at this point, I'm not that interested in just chasing Eli Lilly, but I would be very interested in United Healthcare and a Johnson and Johnson, a Merck and AbbVie. We've taken trades on those, and the remainder. I mean, maybe getting some options exposure here is not bad. Maybe we can make this even simpler and just trade the sector. Right, this is XLV, so we can do an XLV. I mean, look at that right here, and go to the chart. So XLV is trading at 144. Okay, so I do have some technical analysis on this. I was looking at a broadening pattern, and guess what? We could be seeing some resistance. Oh man. All right. So that's a bummer because we looked at, wanting to buy healthcare in this area and do exactly what it did, except it didn't quite come down low enough for me to get those trades that I wanted at the 120 level. Now, as a sector, it's up a decent amount from this low to high. I mean, the sector itself is up about 18%. That's keeping pace with the S&P. So, but now that I look at this, it makes me want to take a look at the individual stocks, not just the sector, because the sector might be, have a nice little run up this year and then pause and look at individual stocks to see if they're better technically suited. So, anyway, I'm just talking. What am I talking about? Does anybody care? Is anybody here? Am I talking to myself? Just kidding. All right, let's take a look at the dollar index. Dollar index trading at 104.12. We talked about this in the flex room this morning. We're getting a pullback on the dollar. I still think that the dollar, if we're going to get a straightforward direction, break, retest, and go. If we see dollar strength, that leads to stock market decline. If we see dollar get back in this yellow box, that gives the market the room to continue to melt up. Okay. All right. Let me check and see how many people are watching this, by the way. If I go to, let's go YouTube live. How many people I have tuned in here? Thanks, Lee. All right, we're live right now. Let me jump into the chat. Just want to make sure my volume. There we go. I'm just hearing myself. All right, we're good. All right, so just spot checking on YouTube. Nice to see everybody. Okay, do me a favor if you're here. I love it when we pop in here, see the watching, see the thumbs up. Let's make sure those are 100%. That helps the algorithm. And then look, these live sessions to me, and I'm not doing them just for myself. Obviously, I can think in my own head. I don't need to talk out loud. I'm not a crazy person. Okay. So I mean, we have 300 or 400 people that watch the Mondays and Friday sessions. Maybe I just didn't make it clear that I'm doing Wednesday sessions at noon. I know people are maybe at work, people are doing their day, but anyway, we got people jumping in here. I like to make this Wednesday session more valuable and make sure that we get to spend a lot of time together. I mean, to me, it's nice to spot check Mondays, Wednesdays, Fridays, and answer a bunch of questions, talk through the market, and see what we're doing. Cool. All right. Yeah. Thanks, Joe. Appreciate that too. Glad you're here. All right. So dollar index, like I said, flex trading room, break, retest. I'm looking to see if the dollar is going to go up. Dollar index and S&P is going to be my correlation. So if dollar continues to go higher, S&P probably dropping. Should be. That should be the correlation. When this happened here, S&P rallied. When this happened here, S&P fell. When this happened here, S&P rallied, right? So here we are where this little chunk, the S&P continued to melt up, the dollar got stronger and the S&P went higher as well. And now we're just kind of drifting to see, like, does that correlation reconnect? Possibly does. Okay. Wes, I got you here. Yep. Nice to see you. Perfect. So that's what I'm watching for currencies, currency strength chart for the day. This is all, oh my gosh, this made me so happy. The Swiss franc sitting here, the lowest of the day, weakest of the day. And I'm going to take another look at my P&L so I've got some dollar Swiss action up, New Zealand Swiss action up, Euro Swiss action up, Aussie Swiss up. Portfolio builder now is up to 9645. It's reduced that drawdown from about 9100 to 9600. My balance is 10.2, so $10,200. Because of positive swap, I haven't closed out a single trade. And my goal is I'm taking a $10,000 account. I want to do this as a class because I want to show, look, you don't have to have hundreds of thousands of dollars to make money in these markets. I mean, I think anybody that could take a $10,000 account, make a $10,000 profit is going to be pretty happy. So I'm doing that as a course. It's called Portfolio Builder. And yes, we're buying and we're accumulating and we're waiting. But I firmly believe that once these profit levels that I'm eyeing are hit, we're going to be really happy that we took 10K or took whatever account it is and double it. Hopefully more. I'd like to have 10K turn into 25 or 30 if I can. I'm certainly going to have to use a lot more margin for that, but we'll see. So lots more to do on that. Okay. But I love seeing the Swiss franc get weaker. And let's take a quick check on those currency pairs right now. Aussie Swiss moving nicely off the lows. CAD Swiss with a J in there. Just kidding. CAD Swiss moving fantastically off the lows. If you can see this little dotted line, this is what I was looking for a potential head and shoulders right here. So if we have left shoulder, head to neckline, and we're breaking that neckline, I'm looking for this area to hold. There's some good pocket action back in here. There's a huge level at 71.50 that is my profit target. I'm going to try to hold this thing all the way back up towards this big inefficiency, all the way up towards 71.50 to 72.50. And that is going to be fantastic looking upside. Granted, it's not done yet. We're still, kind of waiting and watching to see, like, does it break that larger trend line? So yes, there's still some more time needed, more confirmation needed, but we clear this high, just looking left, and ultimately get into that pocket. So all these Swiss pairs could be fantastic. And look, I know it's going to be it's going to be a game of patience. It really will be. And it might drive traders crazy that it's like, why are we sitting in these trades? Well, I'm sitting in the trades because I'm getting paid to hold them. That's why I'm in the trades, right? And that was thoroughly explained in the class. And that's what I'm doing. So CAD Swiss looking good. Euro Swiss holding this low at 92.60. This one needs a little bit more love on the upside, but same type of thing. If we have a large trend line like so, just kind of waiting to see, do we get on the right-hand side of the trend line? Bulls have a lot more freedom and a lot more permission to rally once they break this level and start establishing a low and a higher low, and all of a sudden the momentum shifts. We're coming back to this pocket right there, which is around 102 to 104. How do I measure that? Well, there could be a variety of things. I talked about this establishing, a double bottom, and that just breached that double bottom. So it's not necessarily that any longer, but this is a good target one. And then if you double that move there, that's going to be a target two. So I know there's a yearly pivot sitting around 106 that I'm going to try to continue to hold out for. But realistically, uh, realistically, if I have profits above parity at 1.00, I'm pretty happy with that. Pound Swiss, another one. You can see all these trades, all these structures. So right in there. If we break above this area, get above 111.50, 112, lots of upside potential just to get back to range highs. If we're getting, this kind of window, we measure this move to the upside. I'd love to see Pound Swiss back above 120. Maybe it takes 6 months, maybe it takes 12 months, but that gives me lots and lots of upside potential. Okay, New Zealand Swiss looking better. We talked about it on Monday. I think you were here for me. All you're tuning in here live. Monday was this little falling wedge. If we get to see a break to the upside, go after this high, we're holding these levels here. If this is, and this is where I need to see some freedom here, right? I don't want to see this price just rip up here, find this resistance, and then fall. I want to see price get into this space here. We get into open space on New Zealand Swiss. Now we're talking look left, look left, look left, look left, look left. That's where I want to see this thing go. I would be happy to see this all the way up to 5,900 to 6,000. But confirmation is needed. But again, you can see there's a lot of upside potential. Okay, dollar Swiss looking good, well off these levels. We're on the right-hand side of the trend line now. For dollar Swiss, I'm looking for this area. We're in open space, which is great. If we have a bit of a pullback, so let's say we go up here. If we pull back one more time to equal lows, but use the backside of the trend line, I'm looking to see if we stay there. Stay there, revisit the high. I'm not done. I'm not done at this level. I'm looking left. I'm going to try to take this thing back to 1.00. If I was going to be a little bit shy of that, there's a pocket around 96 to 97 right there. This guy. So this big inefficiency right there would be my profit target. So to me, it's worth accumulating, adding, and then get back to that level for profit. That's still almost 1,000 pips away. So good upside potential, getting paid the whole time for positive swap. So that's my little Swiss. That's my portfolio builder, trying to double an account. I think it's very possible to do that. It's going to take some time. It's going to take some patience, but I think that's doable. Okay. Everything else currency strength wise, we got some trades and exposure in the flex room. We took a small trade on pound dollar, euro dollar. We'll see if that's going to continue to work out. Dollar strength, if we broke out, which we did last week, I'm looking for more. We're long on dollar CAD. We're looking for a short on Aussie New Zealand. We are long on Euro Aussie, long on New Zealand CAD, long Aussie CAD, looking for swing trades to go long pound Aussie, pound New Zealand. We've got short positions running. We got stopped out for plus, like it was break even or better on the Euro pound or Euro yen. I have a CAD yen, pound yen that are short, that are hanging in there. Not big trade sizes, super small trade sizes. I realized I forgot to do my auto profits last week, I think. Well, whatever. I'll figure it out Friday. CAD Swiss were long, New Zealand Swiss were long, Aussie Swiss were long, Euro CAD and CAD Swiss. I'm long CAD Swiss, but I'm short Euro CAD. This trade is pending. We talked about it today in the flex room. There's a little breakout trade you could look for, but I'm just going to hold my CAD Swiss long, not force it. Then we have some carryovers. So, it gets us caught up. Look, we've got some exposure. We got some currency pairs running. We got some stocks. We got some options. Crypto, I did something. I mean, Bitcoin's trading around 43. Nothing crazy exciting, right? 43. And I'm still looking to see if there's a chance we go high, low, lower, high, lower, low. If we don't do that and this thing gets back to highs again, that's fine. It just won't give me a chance to add in where I want. I want to add in anything like 38, anything around 34, somewhere in this area to add on a trade. I looked at this structure here. Okay, so if we break the trend line, pull back, and then we fail, we go down one more time. So it's a high, low, lower, high, lower, low. Look, this low, this high, a pullback against that puts us right around equilibrium, right? So if we're being technically efficient here, 50% pullback, that would be great. If I get that trade that's right here, that 38250 zone, I'm willing to add more to Bitcoin. If we don't get that trade, it just goes higher and higher and higher. That's fine. Get to 68,000, get to 100,000. Let's celebrate some more crypto runs. But it has been, buy the rumor, sell the news. Once we had the approved ETFs, and it has yet to claim the highs, and it has yet to go lower. So we're just kind of waiting out to see where the next big direction is for Bitcoin. I don't see any webinars about Perfect Storm Pro. I would look if you've got the classroom. If you've got the classroom for Perfect Storm, just watch the class. There are recorded lessons and archives. The last live class that I taught for that, I make a point, like those classes have everything you need. Perfect Storm is an easy robot. I traded on like 8 currency pairs. Settings are conservative. I trade really small. I let the thing grow, and it makes 100 to 300 pips a week typically. It's very simple. It does have a drawdown almost all the time. It usually has like a 3 to 5% drawdown at all times. But every week when it's up a few hundred pips, my balance goes higher and higher and higher. And I said this, look, if I ultimately closed out the perfect storm, it would be like this. Here's where I started with my equity. Okay. So I started with like, $10,000 account. If I trade this thing and it just goes and goes and goes and goes and goes and goes, that's my balance. So I mean, it's up like this account started. I've got one that started like 4 years ago. That's up like 50% when I started it. Okay. Now that's my actual balance. Okay. But because I have open positions, it looks like this. I have open positions and it's just managing. So the net result might be around 40, 40 to 45% as far as my gains because I'm going to have open positions. But I'm not closing the robot. I'm not taking that account. I mean, what I might do is if it goes from 10 to 20, I might take that 10K profit, reset the thing, and let it do it again, right? So I'm just going to let it manage the drawdown, but that's what Perfect Storm does. It gets in the trenches, it trades support resistance, it grinds out 30, 40, 50 pips at a time. And I've had this thing running for like over 4 years, and it's awesome. So I love that robot. And I am going to be talking about this one the next couple of weeks. I took a challenge. So the last 4 years, I've had a range robot that runs full auto. I improved that one. I've deployed it for the last 2 years. That runs full auto. I have another one that trades inefficiencies and pockets. That one runs full auto. Those are all price action, range bound, no stop loss robots. So I trade them small, manage drawdowns, and they make profit pretty consistently. In my Discord channel, I post that every week in my blog. And anywhere between like 300 pips, 500 pips is a big week. And I've had some 700. That's fine. That's all great. But notice how I said those are all range robots. Those are all no stop loss robots. The one thing I just ended up doing I built this pretty beefy robot, and it is a trend based robot, but it has all sorts of higher time frame filters to not buy into highs, not sell into lows, but take the meat of the profit and stop trading, wait for a confirmation signal to go the other direction or for everything to realign. And so it's a quality trend trade. It picks its battles wisely, doesn't overtrade. And I ran it on full auto year round for 2 years and traded on all currency pairs, including the yens. And I also sold, right? So I was buying and selling. I didn't have a directional bias. So it's just like a blanket strategy, and the thing made money. It was up like 225% in the last 2 years. Again, that's back testing. It's not live market. Past performance not indicative of future results. You know the disclaimer there. But the fact that that is a full auto trend based system, I mean, look, I've been very discretionary on trends. I believe that the best trends are found in the market first before you trade it. That's how you're going to have the most success and the highest win percentage. And I know this because the system shows about a 53% win rate with a 1.2 profit factor. If I was to use my discretion and use my technical analysis and turn it on for a buy only or sell only when I find the direction, I could probably increase that win percentage to 60, 65% and probably increase that profit factor to 1.5 or better, which makes, that deployment more profitable. But it also makes me have to turn on, turn off, manage, manage, manage. And the reality is, if I'm running all these robots, I kind of like the idea of it's autopilot. I trust it to do the right thing. I built it to do the right thing. It's dynamic based on, current market conditions of volatility, and that's what I like about it. So it's a great start. I just, got my hands on the prototype last week, and so I'm doing some testing and optimizations around it, and I'm really excited about it. So you'll start to see more about that. It's called Hypertrend. I think we're calling it that for right now, and you'll start to see more about that in the next couple of weeks. Okay. So answer your question, Akeem, about Perfect Storm. Jump in and watch a recording, live session that I did in the past, or recording. Watch the educational videos. I've never launched a course with market traders that doesn't have thorough education in the on-demand classroom. Lead up classes, live classes, videos that explain the strategy in great detail. It's going to take you an hour or two of your time. Invest that hour or two and just know the thing cold, right? And that's what it's for. But I give you every resource to be successful, and that is an easy system because once you trade the right currencies, 8 to 10 currency pairs, trade size has to be small so you can let it run. Like I said, there's no stop losses. It manages like pretty simple drawdowns, but it consistently, takes profit every week, which I'm happy with. Okay. All right. Cool. Anything else for today? Couple other things. Well, if we've got some new people in here, I see a lot of the names that are in the Discord group. If you want to join the Discord group and chat, you are all more than welcome to do that. It's free. I just don't want to see anybody spamming my Facebook like I had earlier today. This is Discord for Chris Pulver Trading. So there's a link to join. A couple other things, just some housekeeping. So if you're in my Discord, you got a couple of things to take a look at. I'll bring it over here and chat about it. So here's my Discord, free group chat for everybody. When I go live on YouTube like I am right now, it pops up here so you can join the link right through the Discord. You can also, if you follow me and subscribe and click the notification bell, all the good stuff, and follow me on YouTube, that pops up when we're going live. It maybe pops up as a notification on your phone. I do appreciate everyone coming in here. When you're here live with me, watching live, click the thumbs up button for me. Get that thumbs up to match what we have live. Typically the live sessions are anywhere between, I don't know, 80 to 100 people. And then that day it sits in the YouTube video library and gets 3, 4, 500 views. We're slowly growing with subscribers, but it's consistent. I mean, I started from zero about a year and a half ago. We're at 6,500. So let's see if we can just organically grow it, which is what I'm about. I don't want bots. I'm not trying to buy my way to, 50,000 fake followers. It's like, I want real people that are here to learn and here to trade. Okay. So we'll continue to grow that. My blog, I post this every week on Friday. How do we do in the robots? How we do on stocks and options, anything insights, stuff like that. Analysis, anything I post on Twitter. Education, I've got links. To, if you want to trade in my trading room with me, 5 days a week, $27 for the first month. You can try it out. Any courses, education, strategies, robots, all the trimmings, all the bells and whistles, all here if you want to learn more about it. I also did a video series here. This is an oldie but a goodie. I did this back in like 2016, 17. Market structure, market mapping, support resistance, trading patterns, technical analysis, all these skills that took me years to get really good at. I think going through this course, I mean, it's a big one. I did about 10 hours of video in this, but to me, this is evergreen stuff where I think this will forever help your technical analysis, and it'll certainly get you a lot better at spotting market patterns and structure and getting some big trends in the market. Private instruction, I get asked about this all the time. People contact me. There's two ways to do it. You can message me directly and we'll chat about it. If you go ahead, I've got two links in here. I've got one for a 1 hour workshop and I've got one for a an 8 hour workshop. I mean, I can have 4 hours as well, but it's like 1, 4, 8 private workshops. I do it with just singles and individuals, or I do it with groups up to 10 people. So if you want to get 5 or 10 traders together and do a workshop with me, I do these all the time. I typically just allocate weekends to do it. So if that helps, let me know. And I mean, again, to me, it's cheaper than buying a brand new course. It's cheaper than just guessing what you're doing in the markets. It's like I've been doing this for a long time, and I continue to find ways to be open-minded, objective, and try to survive and carve out profits and do my best. So if that helps, and it's a real trader helping real traders, good. That's private instruction. I've got some specials here in the affiliate section. So a couple of things. A1 Trading, Nick Sayak and team, they're great. They have an AI generated dashboard called Edge Finder. They're doing a 40 to 45% off promo. I have a promo code. It's also a one-time purchase. It's not a subscription. Everything right now is subscription. They have a one-time purchase. My promo code is Pulver, and that can get you 40+% off on the Edge Finder, and you can buy it once and have it forever. They keep adding to it. They keep making it more robust and more thorough. It's a great tool. I see him use it every single day. I have access to it. I'm very lucky because I've known Nick the last couple of years, so I reference it quite a bit, and it just keeps getting better. So something to consider. Charts. I've told traders this. I have TradingView charts, and I've used them for 10+ years. I love the charts. They're easy to build watch lists, easy to build any systems you want, easy to code. I have an affiliate link for this. What I typically do with TradingView is if I'm going to buy more time and more membership subscription to TradingView, I love their summer and July special, or their Christmas and July special, their Black Friday special. Two or three times a year, they do like 40 to 50% off. Just take advantage of that price and extend your membership. I have my trading now are out to like 2025, 2026 for me because I just keep re-upping. But great charts. Tradingindicators.com. Daniel Snake, great developer. I've worked with them for so many years. Has a ton of stuff if you're interested. Just you can have like this amazing toy box of indicators. There's this 360 power bundle. You want to find indicators for tops and bottoms, indicators for trends, indicators for custom this or dashboards. Like all this stuff is available, and I can get you 15% off any product that you get from Trading Indicators. And their prices are super reasonable. And then also what I use a lot through their platform is the MT4, MT5 back tester and portfolio architect, which allows me to put together, I can run one robot, trade all 28 currency pairs, run it on a 1 hour, 4 hour daily, let this software do all the testing for me in one click. So I can, start the testing, come back, 5, 6, 7 hours later, and it's all done, compiled, and organized for me. And then I can go in and optimize it and figure out, how this thing can be the most efficient. So very cool stuff. And for that lifetime license, I give you $50 off, which I think is like, 15, 20%. So affiliate stuff if interested. Okay. All right. Question on the Flex Room, non-FIFO. Does non-FIFO mean to wait for the target to get hit? No. FIFO means, or non-FIFO means that I'm just in to manage it separately. So give me an example. What line you looking at here, Akeem? Anything non-FIFO? I know I typed them in here for Flex for 2024. These. Okay, so Aussie Swiss and New Zealand Swiss and CAD Swiss. Let's see here. Non-FIFO trade. Yeah, so all I wanted to do was get started. So all I did was I bought it. So 56.90 56.90, and we're trading at what? Where's the CAD Swiss at right now? I'm looking at my prices. CAD Swiss is this. CAD Swiss. So if we're at 56.90, this thing's at 64. Did I type that in correctly? That can't be right. Hang on a second. 60. Okay, 60. Sorry, I'll do CAD Swiss. 64.25. 64.25. Okay, so 64.25 right now. That's up about 55 pips. So the reason it's non-FIFO is I'm not asking traders to take a trade at 64 25, right? And hang on to it to 71.50. So if all you want to do is take a buy trade here and have this thing go up a few hundred pips, take your profit, right? And so on non-FIFO, because if all I want to do was like grab some money here, I do it non-FIFO and I can get back in. But what I'm doing is for my group position, I'm holding and I'm holding and I'm holding and I'm building, and that's going to take time. But if you want to just grab like a little scalp and go after 50 to 100 pips, I like directional bias. I think we're up. I think we look at the structure breaking to the upside. So that's what I meant by non-FIFO is you can hold it the entire way, or you can take a trade, be up 50 to 100 pips, and just take the profit, and we can always look to re-enter. But non-FIFO allows you to manage it individually. So I don't have to take it and manage it with 10 other trades. I can manage it individually. Make sense? Okay. All right. Let me double check the calendar here. I think I'm good for the next little bit. Yes, yes, yes. Okay. Any other questions for me today? Otherwise, I think we'll wrap it up there for the midweek market minute. Thanks for being with me. Um, nice to see everybody coming in a little bit late, jumping on that lunch session, but that's why we're doing it. So I'll be back on Friday at 9 o'clock on the YouTube channel and restream, and then Monday, Wednesday, Friday. So it's 9 a.m. Mondays and Fridays, 12 noon on Wednesdays. If this time doesn't work for some people, let me know. I'm happy to change it between like 12, 12:30. But I think 12 right at the top of the hour, noon, lunchtime. Let's get after it. Okay. All right. Appreciate everybody being here. Happy Wednesday. I'll see you tomorrow in the trading rooms. I'll see you Friday for YouTube to wrap up the week. And again, if you're in the Discord channel, Q&A, free group chat. One other thing on that note, please just be careful. If anybody messages you and initiates a conversation that pretends to be me, it is likely not me. All right. I never initiate a conversation in my Discord. I never initiate a conversation in Telegram. You can contact me directly anytime, and I will respond to that direct message. But I will never initiate. My goal is to be one to many, right? It's my channel, it's my content. I'm distributing it to all the followers. I'm not going to be individually reaching out and saying, hey, you heard about this crypto thing? You heard about this other bullshit? Whatever. I don't do that. So please report it to me, but know that it's not me. Okay. If you want to find me on my Discord. My handle is real Chris Pulver. You want to email me, pulver.chris, cpulver at markettraders.com. Doesn't matter. You can find me. Okay. Don't engage in those crazy conversations. Certainly don't say, yes, here's my credit card. That's insane. Just how to find me. So I can't emphasize that enough. It is amazing that even with the last 3-4 months, I've probably had to tell 100+ people about, like, it's not me, it's not me, it's not me, it's not me. So last thing, it's like, you should know this. Common sense, too good to be true. Yeah, all that crap is out there. It's annoying, but that's what happens when you're in spaces. It's traders and wanting the best thing and the shiny object and the whatever. It's all garbage. Just report, flag, block those type of imposters. But I just want to let you know you can contact me. I'll always respond with direct messages, but I will never ever engage first. I will never initiate. That's not why I'm here. Okay. All right. Just want to get that out there. So, all right. I'll let you go. Happy Wednesday. I'll see you tomorrow in the trading rooms and Friday for the recap at 9 a.m. Bye bye for now. All right. Bye.